I'm here with Felix, the CEO of Akash, and I'll give everybody some context. Felix and I have already done an episode before in the past, but we wanted to sit down today for a couple of reasons. One, it's the week of NVIDIA GTC. Two, we're here actually in Palo Alto at the headquarters of the New York Stock Exchange, the Wired slash the Cube, and we just had a great session with the CEO of D-Matrix, Positron, myself, and Dave. But we wanted to really do this second kind of deep dive because there's a big headline that recently came from Akash, and we're going to jump right into that. $300 million deal with MyTech Servers and AMD. And tell us more, Felix. That was the headline, but tell us what you're most excited about and some details about it.
Good to be with you, Sam. This is part two from the conversation we started last summer in 2025. We're very excited about this, partnering with AMD and MyTech. It's a three-way partnership where AMD provides the GPUs, MyTech provides the overall server assembly capability and capacity, because it's a tremendous amount of scaling capability and capacity that we need for this to meet what customers need. And we provide the diamond cooling. The server goes out as a co-branded product, branded with both Akash and MyTech on the chassis. So that is the product. We're launching this with the intrinsic family, specifically the 350 GPU from AMD. And so we're very, very excited about it. This comes in the heels of us announcing a week earlier that we had just shipped the NVIDIA H200 server that was also diamond cooled by us. And we just wanted to make sure that the market understood that we are agnostic to the GPU supplier, even though we announced this new AMD-based server. So we're very pleased with the announcement. We're excited about it, and we can't wait to get started on shipments.
Congratulations again.
Thank you.
So zooming out, so the listeners have context. I met you as you were transitioning from 7 or 8 years of R&D for the space business. There's now actually space radios in orbit still as we're speaking today with Akash technology cooling them down. And the main premise when I met you that I just could never unforget this, but it was, you told me, you're like, hey Sam, if we can cool down a radio in space and actually get it cooler and operational with our technology, it will actually be far easier to do that in a data center. And you laid out the logic so clearly, it was so crisp to me. And I remember myself, and when I took it to the LP diligence board, just overwhelming excitement. And I believe at that time you were at $0 in server revenue. This whole transition was something you were saying, like vision based and a lot of patents behind it. But now here we are, a $300 million deal. So I've invested at that time, joined your advisory board, invested in a few rounds now with you, and walk us through like what actually goes into getting a deal like that done. Because I think what happens is people just outside of the space just, oh, it's another big deal, it's another headline. They don't probably understand or even fully appreciate everything you have to do, but like reverse engineer it. Walk us through some of the big milestones to get that deal off the ground, and then what comes next. Where are we going next after this?
Sure. So the first thing was we had to take the technology that we had done in space and adapt it to the GPU. So yes, the GPU had much lower power density than the chips in space that we were cooling. And yes, the environment within the server is less stressful than space. In space, you have vacuum, you can't do fans, and also it's radiation that's constantly bombarding the chips. Here, it's a lot lighter. You don't have those factors to worry about. So all of those things are true, making the technology adaptation easier, but you have to do the work and actually demonstrate the technology. These servers are very expensive. They're hundreds of thousands of dollars. So you can't just buy something easily if you're a small company with no money. And then as you burn or churn through these GPUs, which are quite expensive, you have to get replacements. So the development cost is quite significant, and the time to market can be long. But this was something that we understood. We had already done something more difficult, and so we were able to leverage our expertise and make sure that that development time for the adaptation would be very short, and that the cost would be very lean. And that's what we used a lot of the monies that you invested, the seed money, to get this done. So that was the first bit, is actually adapt technology for the server, for the GPU. The second bit about that is how do you convert then the reductions in temperature, which was about 10 to 15 degrees Celsius, to an economic benefit for the end user, whether the end user is someone who's going to use a ChatGPT type of application, or a cloud service provider, or a data center company. You have to convert temperature and energy efficiency to dollars to a benefit, an economic benefit. People call this a total cost of ownership, a TCO. So we had to determine that, calculate that, and we spent quite a bit of time working with our lenders, our financiers, to make sure we were able to develop something that was validated by the banks. It had to be them saying it, not just us.
Yep.
And ultimately, we landed at around $1 million in economic benefit in cash for customers over a 3 to 4 year use time, and that's per server. So now, and that takes some effort. We had to stress test that calculation, make sure that it worked under various circumstances. There are customers out there who don't want to change what they're currently doing, whether it's they have a liquid cooling infrastructure already and they don't want to rip that out, so we have to work with them.
Yeah.
That's fine. We have some customers who are doing a brand new build, a little bit easier. You have some customers who have an existing build. Some servers they don't want to retrofit, some they do. You work with those. So there's a wide spectrum of customer types that we have to work with, and we wanted to make sure that for each segment of the market that we delivered significant value to that customer. Some customers also don't control the temperature in their data center. For example, one of the benefits of our server is that you can literally turn off the air conditioner. Just turn it off and let the room go crazy. Let it go up to 110, 120 degrees Fahrenheit. Even at those temperatures, you can't run existing servers. The GPUs are not allowed to go up to 120 degrees Fahrenheit ambient temperature.
Right.
But with an Akash Diamond Cool server, you can.
Right.
So we had to make sure that for all of these customers, folks who can't control their data center temperatures, to folks who cannot control the data center temperatures and want to keep it operating at, let's say, 80 degrees Fahrenheit, that there was something of that meaningful value for them. And then also for those who, there are data centers that don't own their GPUs that they host, right? And there are ones who do. For the folks who don't own the GPU, we wanted to make sure that there was significant economic value, and that's because they're saving a tremendous amount of power. That power can now be repurposed for new compute, new customers coming into their facility. So that's a benefit for them.
Right.
Okay, if you're going to use a competing technology, you would not have that new revenue.
Sure.
So those were the kinds of things we had to work out. And then in the end, we found something that did make sense, validated by several of the top tier banks. And that led to us feeling comfortable about announcing these servers. This is just the beginning. We have additional OEMs that we're working with that we will announce something with in the foreseeable future. New SKUs, new GPUs. And yeah, we're very excited.
Absolutely. I mean, just to see a founder and a business and just a kind of portfolio of technology that you had developed go from vision and momentum to execution, and actually bringing this partnership to life with such great partners around you it's really stellar. Diving a bit in more, so I've read credible sources like Epoch Research saying 60 to 70% of the actual cost of owning a server over its lifetime go literally to the power.
Yeah.
Not to buy the server,
Right.
not for the real estate
Yeah.
where you put it, not for like the staff, the people who build it.
Right.
It's literally the power.
Correct.
And then the other paradigm is the power generation grid of the United States is mostly from the 60s to 70s.
Correct.
I've read around 75% of that power generation grid actually needs to be sunset and updated.
Yeah.
So we have that paradigm happening. And then the third thing is AI, now in certain states, like for example, in the state of Virginia, it's estimated by 2030, the data centers in Virginia will actually consume more power than the citizens. And so we have all of these underlying tensions that I don't think are completely understood.
Yeah.
And you're coming in and saying, hey, I'm going to actually bring in more revenue per server and lower the power demands on that chip. Explain that a bit more.
Sure. So the first paradigm that you described is captured in a parameter called the PUE.
Okay.
The PUE is a measure of how much electrical power going to a building, a data center, that actually goes to compute.
Right. Like you're bringing the power in from wherever it's coming from. How much is going to the actual compute versus other things?
Correct.
Yep.
And you just described it, how so much of it is actually going to power or cooling,
right?
Not to compute.
And by the way, that 60 to 70% includes cooling. Cooling is around half of that.
Correct.
Yeah.
And so what we do is to pivot, or rather make sure that most of that power,
that cooling power,
of most of the power going to the building, stays with compute,
not with cooling.
Correct.
Because an air conditioner takes around half of that power.
Correct.
Liquid cooling, what would you say it takes? It's a little bit better, right?
It's better, but then there's the cost of installing the infrastructure cooling.
By the way, people, servers don't like water.
They don't like water.
I won't say I've tried, but just picture a server interacting with, it's very complex infrastructure.
Material science don't like water. If we're forced to, we'll deal with it.
We'll do it. But it's very expensive.
It is very expensive.
And guess who pays that? The consumer.
Everybody ultimately pays for it.
Everybody, but I'd argue the consumer using the token gets the worst of it.
And to be very clear, we are consistent with and supportive of and enabling of
stack
liquid
around
cooling. We'll work with liquid cooling.
Because why not? Because it's a great solution.
Absolutely.
Crusoe's doing a lot of great stuff.
Yeah, we don't have anything bad to say about it.
Yeah,
but we're sympathetic to companies that don't have the muscle, the money, the capital to just invest in that liquid infrastructure and wait 10 years to get the return on that. That's a little bit nuts.
Yeah,
for them.
It's also a lot of water.
I have empathy for that. Yeah, it's a lot of water.
Like states like, there's counties in Wyoming where data centers are being built. I'm forgetting the name, but they don't have the water to give the data centers.
Right.
So we're synthetic diamond, which you're leveraging.
Yeah.
I mean, I know it's in the billions of supply you have line of sight to.
Yeah.
But it seems like a far less constrained resource.
It is.
Do you agree with that?
Absolutely. And so that's why we said, okay, if we can make that purposeful use of electrical power going to a building to be mostly going to compute
the server,
then your PUE is closer to 1.0, 1.1, and then everyone's happy, and then we have a more sustainable scale up of this revolution that we're all trying to support.
Sure.
So that's my comments about that. I think on the whole, there's definitely an energy supply problem. You mentioned these issues, these big buckets of problems, and I think that a little bit like how we started talking about sources of electricity in this country. There's who is most sustainable. You got wind, you got solar power, you got solar thermal,
hydro.
You have hydro. You have. There's so many. There's a plethora of generation sources,
activities,
right? And right now we have sort of a medley of all of the above. And by the way, oil isn't going anywhere. We still have.
Also, we don't agree as a society, at least in the U.S. We don't agree how to generate power.
Right.
We don't agree how to store power.
Right.
There's so much. Go to New Jersey. They had billions lined up to put wind offshore, and then it got shot down.
Yeah.
So you get a regime change, and the whole energy generation storage discussion changes.
Yeah.
All the plans change.
Everything changes.
So it's very in disagreement. Yet the demands just skyrocket.
Demand keeps going up
for the power.
And at the end of the day, I think we'll continue to have a medley of all the above. and we support everyone. We're saying that whatever the power source you use, we will give you the most efficient compute use possible.
When it comes to that chip running
Correct.
an inference workload.
Correct.
Because tell me this, like, we were on the floor here in Palo Alto
Yeah.
after our panel,
Yeah.
and like that's one of the new. I'd say the AI market freaks out about something every week to months, couple
Yeah.
months. It depends, right?
Yeah.
And right now, the whole Twitter freak out is around. Okay, like the server companies, AMD,
Yeah.
NVIDIA they print cash.
Yeah.
Okay, great. The neo clouds, they're doing okay.
Yeah.
Like CoreWeave's a little shaky on the market cap, volatile. Nebia's just got a $2 billion investment.
Yeah.
I know Roman, the co-founder there. I'm an investor in private companies that are doing very well with
Yeah.
mass scale GPU deployments.
Yeah.
So those companies, okay, everyone's like, all right. But now let's go to the third level in this. And I guess the other level was the whole supply chain memory. All those people are doing great.
Yeah.
But go to the fourth level, which is like the consumer,
Yeah.
the business, the enterprise using the model.
Yeah.
People are saying, hey, it's an unprofitable endeavor to just allow unrestricted token usage in your enterprise. So how do you tie your technology back to that problem right now?
So we've actually taken our TCO calculation all the way to the token generation.
Right.
So we can see that because of the cooling that we do, that leads to a 15% and
Lower cost per token.
Correct.
Therefore, so for example, if I'm a law firm, I'm drafting contracts all day, I'm paying Claude $1,000 a month per lawyer. Now I'm going to pay Claude $850 a month. If
Correct.
Claude passed that all to me because of you.
Correct.
And I think that's the paradigm shift people need
Correct.
to realize with your technology.
Correct. Because those guys are competing, right? At the very end user case where you as a consumer have options, OpenAI, Claude, you got 4 or 5.
Do nothing.
Correct.
Yeah.
So in order to compete with each other, you're going to try to maximize your entry into the market with a more effective price.
Right.
And that's only possible if you can get a cheaper, source of token.
Right.
And so you have an incentive, therefore, to pass on some of my savings, the cheap cost of token that I'm giving to you
To
your
the down the
customer.
stream.
Correct.
And so like this is an interesting question, but like in this legal example, we have Harvey AI, which builds ultra specialized legal services on top of Claude, on top of OpenAI.
Yeah.
Do you sell to them, or do you sell to the model provider, or do you go up the stack and sell to the server?
So we sell to whoever owns and operates the GPU.
Okay.
And so now we make a case and establish a case for the end maker of the token, whoever's going to sell that token, so the law firm,
Right.
so they can see how
It's such a broad market.
Yeah, I know.
Like I can't imagine your CRM, because you could go sell it to the law firm, the model maker, the server, the AMD, the MyTech,
right.
There's
so many
and the neo cloud
pathways that we could go.
Do you, as a founder and CEO, do you have to narrow that in the early days?
You do. You have to narrow it to whichever is going to be your biggest market, immediately addressable market.
And most the propensity to buy is now.
Right now.
Yeah,
correct.
they don't need 6
Correct.
years of education.
Correct.
They can take
Correct.
A new technology risk.
Correct.
Because the benefit is so great.
Correct.
And who is that
and
today?
as a startup company, you need to survive. Before,
Yeah.
You can't wait 4 years for someone
The market to catch up.
No, there's no time.
So for you, that's AMD and MyTech. MyTech's putting it all together. AMD's giving you the server, and then do you guys
AMD's giving us the chip.
the chip? Sorry,
Yeah.
and then do you go out as a joint unit in a joint sales force and pick customers?
With us, yes, all three of us, because we're getting inbound from the
Globally,
world.
I'd imagine.
Everyone's like, "Hey, we want this, and we want," and so it all
So how do you
comes
weed
into-
through all that? I'm just trying to be in your shoes.
We try to look for. There's a good filter that we apply to make sure that it is a use case that is
like good discovery questions.
Yeah,
Yeah.
absolutely. We have to be disciplined about that. We just can't do everything
For everyone,
No,
right?
No.
Yeah, jack of
We'll
all
never
trades,
get there.
master of
And
none.
eventually, when we're at scale, we get the capital. to assign a small team to a new use case.
It's almost like different businesses inside of Akash.
Yeah.
We have Akash.
That's why I sometimes envy NVIDIA. They have limited capital and they can pretty much do just about everything. And there's always a team looking at everything.
Incredible, right?
And because your NVIDIA, your market cap is what, 4 or 5 trillion. And
It's more than all of big pharma combined. Yeah,
wow, it really is that. It's incredible.
I mean, just to think about that. But but are you able to share what customers in terms of propensity are you most excited about that are like so eager beavers to get
I
down
think
and
the
cold in there?
cloud folks.
The clouds. Are we talking neo clouds like the CoreWeaves and Nebiuses, or
I would say the
hyperscales?
The neo clouds.
Okay.
The neo clouds
Because they're more nimble. They're a bit on the younger
faster,
side.
Yeah. Much more reactive.
They're
responsive.
also financial compression so
Yes.
heavily on these companies.
And they're the disruptors.
Right. They have to be.
Absolutely.
Because how do you not go with Google if they're not doing something incredible?
Yeah.
You know?
And the bigger companies just they're so big. It takes a very long time to have those conversations. Some of them are faster than others, but they're still a lot slower than the neo clouds.
Interesting.
By far.
Right.
We also like the AI companies, some of these new upstarts, I would call them.
Like model builders or
Yes.
more application?
Because they do have tremendous needs for compute.
Yeah.
The third group are just enterprise who have their own sort of proprietary code, and they can see the bottlenecks, the issues. They're buying a lot of compute, and they don't want to be stuck with traditional compute. They want compute that's going to be sensible to them. And then if you're telling them that you're going to give them $1 million per server, like what the?
Yeah. I mean,
that's
and that's like on a 300,000 server, you'd say, or
Yeah.
And then I love this angle you used recently, and I think it was pulling your margin revenue from the future into today.
Correct.
Like imagine what you could do with your margin revenue that you would have had 2 years ago today.
2028, 2027.
Where do you see them spending that?
You bring it into 2026. So that's a no. So oftentimes our customer is the CFO.
Right.
We almost never we don't prefer to talk to the technical CTO.
Because you don't want to get into these it's just the wrong group.
It's not really a validation question anymore. It's not.
It's already been proven.
It's been proven.
Yeah.
So the discussion is really with the CFO, and then it's over. It's about, do you want the money or not?
Yep.
And so it's a no-brainer.
But do you see, so pulling this margin revenue from the future into today, do you see them passing that back to the customer for that problem we're talking about, where is AI profitable yet as a business?
Yeah.
Or do you see them keeping it themselves for more aggressive expansion?
Yeah, I see some of them sharing with their customers that benefit, and others maybe not so much.
Just trying to increase their own point basis.
Correct.
Fair enough. I mean.
So I do see a blend. I don't know if we can incentivize or push one direction.
I don't think it's up to you, really. Yeah. So talk to me more about something I found really that I learned as an investor is this concept of diamond cooling for an MI300 versus an AMD, I think 3500. And then there's all these different generations of NVIDIA chips. We had Positron today on our panel, and they have a chip that's hitting hyperscale with Oracle.
Mm-hmm.
But how do you, on the technology side, when you go from chip to chip, maker, like a NVIDIA to an AMD, how much does that change on your tech roadmap? I'm trying to get at, what are the differences as you go to different chips? What changes and what do you have to do to adapt?
So what we do, for us, it's a resource question. It means staffing up to match not only the volume of SKUs that these companies are presenting to us, but the cadence of change.
Right.
Rapid introductions of new SKUs. NVIDIA is on fire. AMD is absolutely keeping up. And so for us, the challenge is in keeping up with not only the number of SKUs, but also how often they introduce new SKUs. So every time they introduce a new SKU,
what changes for you? Is it a lot of the specs that go into that chip design, on how you insert your technology in the
Yes,
middle of it.
yes,
Like
'cause
you have to recalibrate everything.
we have to redesign our
It's
tech.
like a Ferrari releases a new car with a new transmission every year, and your job is doing some of the gears in there. You
Yeah.
have to redo your gears.
Redo it and do it rapidly. There's no
Right,
time.
and there's
to
no
take
room
your
for
time.
error either.
No room for error. You have to do it rapidly. Make sure it's qualified. Reliability is absolutely bulletproof,
Right.
and then keep it moving.
So,
So rapid innovation is critical.
right,
It's absolutely essential. It's very key.
right. Are you using AI at all for that?
We do.
Tell us about that.
We use AI for design. We use AI. I mean, for like any other company nowadays, you have to. Otherwise, you're going to end up hiring hundreds and hundreds of people.
Yeah.
So you have to use AI for research, for design, for development, for manufacturing, and yeah, it's absolutely vital, make break for any company today. There's no you don't have a choice.
Right.
You have to use it in your fundamental design work.
Is there your favorite use case or one you're like, oh, I just love that one that you're using as a business today?
I know our competitors are watching,
Yeah.
so I will just
Yeah.
say we like all of the above.
Okay,
We like all of the
fair.
above, yeah.
I wanted to ask you this. So we have air cooling, we have liquid cooling, we have putting data centers in Nordic countries that are pretty cold, just generally speaking. What other cooling technology? There's some stuff coming out that I'm looking at a little bit, but I'm curious if there's anything is there anything for, even if it's at the PhD paper level, is there any other kind of new trends that you're like, that's actually fascinating. That could do what it could be another like paradigm shift, but maybe in 10 years. Or is synthetic diamond it? Are we at the
If I were
cusp of like what?
Put my
Yeah.
scientist engineer hat on.
Yeah.
I would say I think the next leap
Next
in
paradigm.
technology
Yeah.
would probably be quantum computing.
Quantum.
Yeah, I think that's a level of efficiency that is a couple of notches above where we are today.
Do you think that replaces general GPUs? And will that be on new model architectures that aren't even LLMs? Because I know Sam Altman's talking about that. And then Jan LeCun's new company, Real World, I think, model, like there's new model paradigms being pushed.
I think it does enable new models, and maybe it's now going to be thought of in a different way because the speed of those is so rapid and the energy efficiency is so great that it opens up a new world of discussion around what could be done. I think that so to your point, I think it's the basis and the platform on which we talk
evolve
about
next.
Yeah, we talk about compute, we talk about models. They will all start with a quantum computer, and then like we always do, we'll run those to the max, and there'll be a heat problem, and we'll have to figure.
Yeah, we'll put some diamond cooling.
We'll have to figure it out. Yeah.
So there's no real other paradigm shifting innovations you see in GPU cooling right now.
I think it's
Because I've scoured a lot. Because I'm an investor in this stuff. I'm like just curious.
The thing that attracted me to diamonds
Right.
as an inventor is that it is absolutely
The final boss.
Yeah, this is it.
This is it.
The reason why it's very, very cool, pun intended, is that the distance between the carbon atoms
It's so
are
close.
the tightest possible.
Because it's literally been sitting there with millions of years.
Exactly.
Compressing.
Exactly.
Yeah.
So you can't get any closer, and that proximity is what enables the thermal conductivity. So when this guy rotates, this atom will rotate immediately because it's so close.
So it dissipates the heat. So
Yes.
because it's kind of like a bunch of people standing on a freeway, if they're far away from each other, throwing a bottle of Coke, like a can of Coke, it takes longer. Whereas if we're next to each other, we're standing,
Right, that's a very good analogy.
that's like the diamond cooling.
Yeah.
We're just rapidly handing this heat away from the
away
surface
from the surface. Yeah.
compared to air cooling,
Right.
which is like terrible on efficiency,
Right.
versus liquid cooling, slightly better but very complex.
Yeah.
What else is there anything else you
I
fit?
think that's it. I really
Or
think
put it
that's
up in Norway.
I mean, there are, as you know, some of the folks with trillions of dollars who are talking about putting this stuff in space. data centers in space.
What's your view on that? You're a space guy. You're actually credible on this.
We actually
you put
have,
things in space.
We have them in space right now.
Yeah.
And we also have things in
So
underground.
give some advice to these young,
Yeah.
ambitious CEOs trying to get up in space. Like, is it going to work?
I think that the concerns I have are, number one is, can you get your payload into orbit? And I think Mr. Musk can do it because he owns all the access to space.
But at what cost? Yeah.
And for the rest of us, we don't have access to space. So that's a major impediment. The second thing is, for me, it's a distraction because with my existing business, we are scaling, and I mean, it's an exponential growth for a lot of us today for just the Earth business.
Right.
If you were to say go today, it would take 2 years to get a payload into orbit. So do you wait 2 years to get a payload into orbit, or do you go ahead and serve Earthlings?
You serve Earth
right
now.
now. So I don't see the use case.
Will it work or not?
We still have a problem here on Earth. It's a big opportunity. So then I also see new challenges with the space, but there are opportunities. But when you net all of it out, I think that an Earth business is more exciting for me,
right?
As an operator and as an investor. I think it is exciting to still try and solve the Earth problem.
Right. I've bounced around on it. I don't have a strong view yet.
Yeah.
So for the record, like, I don't know yet what's going to happen, and I'm always curious. I'm listening to what Mr. Musk is saying. I'm listening to the critics.
Yeah.
I think some of the things are just, the initial training of the GPUs, I guess you can do on Earth.
Yeah.
I guess you kind of monitor them.
Yeah.
And you break them in, and then you send them
One
up.
thing people don't realize is that communications to space, and we know this because we
Right.
make radios for space, it is a limited fixed resource.
Yeah, exactly. That's another one of the
Not
challenges.
everyone can transmit. There's not
And you're not
infinite number of
transmitting inference
channels.
workload. That's extremely
You have
nice.
to get permission from an FCC somewhere in the world, and so not everybody will get to transmit. Whereas on ground, I can run a copper wire from this room to that room all day long, and no one will stop me. I can do as many copper wires or run radio waves on Earth.
Or you could even go to photonic networking.
Yeah,
There's
fiber.
even
do
more
anything, but
forms of networking.
to go to space, you have to be the first to bid for that channel license from whatever the regulatory agency is.
Yeah.
It's immensely costly to win that bid.
Cooling. The heat density in space is like insane.
It's incredible.
And GPUs, as we know, are so hot.
Yeah.
And then if something breaks, you can't fix it.
Finish. Yeah.
Also, when you're decommissioning the server,
Right.
well, how do you safely?
I was about to say, this thing's don't go on forever. You have to take things
You can't
down.
just leave it up there,
No,
right?
you have to decommission.
So, how is that any cheaper than doing it here?
I don't see it.
Yeah.
I see challenges, and maybe when we max out the Earth's need, which I don't see yet how we do, then maybe there's a case. But it is exciting, it's sexy, it's cool, it's got all the things in it.
It's people love space fantasies.
Yeah.
It just gets the people going. But I don't know if it's a real business or technical opportunity yet.
Yeah.
Awesome, Felix.
Yeah.
Well, anything you want to cover that we didn't cover today?
I think we've touched on it. We're just excited with the partnerships we have. We're excited. Thanks for supporting us. You were right there in the beginning when we started to make this move towards AI. And it's just been an extraordinary ride for us. We love the partnerships we have with both AMD and MyTech Computing. They're phenomenal companies, very entrepreneurial in their work ethic, their approach to business, super fast moving, and it's been a real pleasure to work with them. So we're very honored and excited.
Congratulations on your
you.
success.
Thank
And I know we're just getting started in this market.
Yes.
How big do you think this could get, like diamond cooling? And because like for the naysayers, they're like, oh, why do people need that? Or, oh, it's too niche. I don't know what people are thinking, but I don't.
Let's talk about it again in 6 months.
Yeah. So there we go. We'll do this again in 6 months. Thank you,
All right,
Felix.
thank you.
Thank you.
Sure.